Hello there. Welcome to the Business Insight series by JK Diamonds Institute of Gems and Jewelry. So, the purpose of this Business Insight series is to share learnings related to business strategies for business owners, jewelry professionals, the management strategies, startup stories, learnings on how you can build a startup, growth hacks, business insights, as well as learning from established businesses such as Titan, Tanishq, Kalyan, Bluestone, and so on. So that's exactly what we're going to cover in this particular video. We're going to be learning about how Kalyan Jewellers has grown to a whopping 33,000 crore turnover business, the learnings from such brands as well as other branded jewelry ventures. Before we dive deeper about the learnings from Kalyan, let us first get through the facts which they have just reported in its latest results. So I'll be sharing my screen now. Let's have a look. So there, so there you are. So what Kalyan Jewellers 33,000 crore FY26 results mean for every small jeweler. So as I said, let's dig deeper first into the facts. So it's the biggest year on record for Kalyan Jewellers. They closed FY26 at 33,000 crore with a 42% jump over the previous financial year. And in Q4 itself, which is the Jan to March quarter, they had a growth of 64% and the same store sales growth of 45%. So this is really huge. Say the triple SG growth is something that is very important when a jewelry business is becoming a brand. And this is something that is very relevant for every local store owner or a family business, family jeweler. And why this is important is because if your same store sales is growing at such a good rate, then it's highly likely that you can start thinking of further expansion related to multiple stores or actually scaling up the present store into a much larger space. So these metrics are important and good to, track. So in terms of every metric, whether it's revenue, whether it's margins, whether it's digital, their franchising strategies, all of these somewhere or the other have some learnings for you as a brand, for you as a jeweler. So what we are going to do is we're going to break down six learnings from these results, and these learnings will be concrete, exact strategies what these branded jewelers are actually using currently, and what you as an independent jeweler or a small jeweler can learn from them. So that's a quick, grasp around the entire picture. 64% growth in Q4, triple SG of 45%. Candere, which is their digital first brand, actually grew by 360% in Q4. Now, this is huge. And not only that, in this particular financial year, Candere got its first profits. Profit after tax uh, was positive this time. And in the last 2 quarters, they have turned a loss-making e-commerce brand into a profitable venture. So how did that? What is their strategy around it? We'll dig deeper onto that. They have currently 507 stores, out of which 174 stores in India are the FOCO model, which is where it is franchise owned and company operated. We'll dig deeper into this as well. The profit is estimated to be 1,100 crores versus a 714 crores. So that is where the growth is. And also their final results are yet to come. It will be declared in May. So this is an estimated profit. Another important chunk is the EBITDA margin. It is at 7 to 7.5%. So this is where, somewhere Kalyan may be lacking. And this is a big learning for jewelry businesses. If you compare Titan or Tanishq with Kalyan, Tanishq is at approximately 20 to 25% of margins versus Kalyan at 7%. So just, running behind numbers, we may see from a layman's perspective, we may be seeing large figures like, oh, 30,000, 30,000 crore ka turnover. But when you dig deeper and see that, okay, your margins are only about 7 to 7.5%, this is not some very fundamental fundamentals. Uh, your margins should have been better. In fact, as a local jeweler, as a small jeweler, you're already doing better than 7 to 7.5 margins. Ideally, a small jeweler, approximately based on how much research and which based on the number of jewelers that we have been working with, we have trained, we have seen that an easy 15 to 20% margins should be there in your jewelry business. So yes, let's dig deeper now into each of these. You can see the scale of growth in terms of revenue, in terms of profitability. Now, what actually drove this growth? So, as I said, just don't go behind the numbers. You also have to see the market of insights. Gold price rose by 25 to 30% in the last financial year, from April 2025 to March 2026. So it grew by 25 to 30%, meaning the inflation in gold, the increase of price of gold has actually contributed to the increase in revenue. It does not necessarily mean that they sold more gold in terms of kgs or grams, right? So the volumes of how much actual jewelry is sold is somewhere flat. The revenue has been strongly supported by the increase in by the increase in gold prices. Okay, so a jeweler who's selling, let's say, the same number of pieces will easily show a 25%, 20 to 25% growth in terms of revenue, but profits, fundamentals does not necessarily become stronger. So सिर्फ दिखा पे नहीं जाना है, सिर्फ नंबर पे नहीं जाना है, you have to understand कि dig deeper and see कि actually क्या हो रहा है इंडस्ट्री में. Okay. Secondly, most important, you have seen that 8 to 9 consecutive quarters, Kalyan has shown same store sales growth. So overall, even without expanding into new stores, they have been growing very well within their own stores, within their current stores. And this has been strongly supported by the wedding season, which happened in the last quarter, last and the previous quarter, Q3, Q4, and also the festive demand. Here, what we are seeing is, especially on the festive front, what we are seeing is that lot of these branded jewelers have created a very structured blueprint on how to create demand during the festivals, be it Dhanteras, Diwali, Akshaya Tritiya, Gudi Padwa. So based on regional festivals, they have created a strong blueprint where they are starting much in advance, from designing, from messaging, from communication, from PR, from branding. They're starting probably 1.5 months before their offers are already starting. They're pre-launching their offers. They're not waiting for the actual day of the festival, which is what most jewelers are doing today. So these are some of the learnings that we will come to. Also, the shift towards branded jewelry is real. Okay, today, if you look at the jewelry market is about 7 lakh crores. Okay, out of this, organized retail is only about 30 to 35%. But it is steadily growing. Okay, so every new customer that a branded store is getting was once a customer of a local jeweler, and this shift is accelerating with the number of these brands like Kalyan, Senko, PNG, Tanishq. All of these are the speed at which they are opening stores. Very soon they are going to be a neighboring store. So the speed at which they are growing is phenomenal. They are, opening up 50, 60, 70 stores a year. So you need to understand that every local jeweler out there, every small jeweler, every family-based jewelry business needs to understand that the entire share is going towards organized jewelry market. Your edge is relationship, your edge is trust, but that is also coming down gradually as more and more of these stores are opening up. The only way for you to survive and thrive in this market is to become an organized jeweler, to start having structured departments in your business, start having good teams, in such a way that your business is running in an automated way, so that you as the owner or the management of the company or the professional who's working in the company can start focusing on strategy, can start focusing on the on having the right designs, can start focusing on marketing and branding. So these things are more important, but these can only be important after you have set systems and processes in all your other departments, be it sourcing, be it designing, be it sales. So all of these things need to be well structured. So you need to step up and start putting out your business out there in an organized manner, right? And lastly, what drove this growth for Kalyan Jewellers and for majority of the branded jewelers, all of them have confirmed this one thing, that studded is outperforming plain gold in terms of profitability. Okay, so the gross margins in studded is 25 to 30% versus in gold, which is around 6 to 10%. Like हमें भी पता है कि जब आप बेच रहे हो 92 के भाव में मिल रहा है गोल्ड ज्वेलरी, और 95 में हम खरीद रहे हैं आफ्टर मेकिंग चार्जेस वेस्टेज, एंड वी आर सेलिंग एट अराउंड 100 मे बी लिटिल बिट हियर एंड देयर, ऊपर नीचे होता रहेगा. सो वेर इज द मार्जिन, इसके पीछे हमें कितना कुछ खर्चे करने पड़ते हैं. So you have to realize that the move towards studded jewelry is for profitability, is for bettering your business fundamentals. So now let's take up learnings one by one from each of these. But before we get there, let us understand the expansion model of Kalyan. Okay, how Kalyan is actually scaling its business. They are focusing on two types of franchise models. One is company owned and company operated. The other one is franchise owned and company operated. Okay, so here what is happening is Kalyan is funding all of the capital in COCO model, or capital, inventory, and the staff. The margins are heavily controlled by Kalyan because it's fully operated and owned by Kalyan. Though it is slower to scale, this focuses on profitability, and fundamentally, it is a stronger way of operating. However, when you bring in a franchise partner, the franchise partner is probably getting about 20 to 27 crores in the setup. The Kalyan is operating the full store. The franchise is only an investor, and the store, staff, inventory, customer service, everything is managed by Kalyan. So Kalyan has 174 stores which are running as per the FOCO model, and this is a figure which has been tracked up to September 2025. This FOCO model makes it very asset light for Kalyan because they are getting the investments from the franchise partner. So you're not deploying additional investment from your own capital. And obviously, you are sharing a share of your turnover, but it continues to be an asset light model. So you're not taking as much risk as much as what you would take in COCO model. So that is one thing. The third aspect that actually helped Kalyan scale is its digital first brand, which then they took over the last couple of years, they have moved that to a phygital brand. So Candere has opened 110 stores. So it completely moved from a only digital or only e-commerce brand to an online catalog plus offline experience brand, and it became PAT positive. It grew by 360% in Q4, and this has really boosted Kalyan in actually increasing its turnover. And the turnover is the target is about 1,000 crore revenue in the next within the next 3 years. So that's some factual data around this. So I'm just moving myself here and there in just to get the figures shown on screen. Sorry about that. So finally, a big summary, 507 showrooms globally. Obviously, they have also started opening up stores in the Middle East, in multiple other countries as well. They have also started going backward integration into opening up manufacturing for their own stores. And their targets are to open up to 85 to 90 stores per year. That is why I said that they're coming next to you soon, if not there already. And the biggest of all, because of this entire FOCO model, where they have opened 174 stores using FOCO model, their outstanding debt is almost zero. All their long-term debt All their outstanding borrowings have become zero. They've been able to repay all of their debts. So that is, another strong fundamental sign. So apart from the net margins, okay, which is only at 7 to 7.5%, rest of the fundamentals look pretty strong. So now let's dig a little bit deeper into the learnings for a small and medium jeweler from a brand like Kalyan. The first one is expanding without burning capital. So the FOCO model lets India's top chains open about 85 to 90 stores, as we just saw that that's their target. Okay, the partners investing. So from your point of view, okay, before before you think of opening another store, okay, you should be asking yourself this question that can a trusted partner help fund your next store? You know, so this is something that we have actually seen among our students also. One of our alumni was running a local store in Pune with since about 15 years of experience running a local store. What they did was they approached an HNI to fund about 40 lakhs to 60 lakhs in between for their second store, and they were willing to do that. So they brought the expertise of running a jewelry store versus and combined with the capital of the HNI to about 60 lakhs, and they opened their second store. Okay. So this is making the risk lesser. The capital infusion that is required from the owner's end is lesser, and you can always expand faster. Now, this may not necessarily mean better profits, but it does help in expanding your brand value, your brand presence. Having another store adds to new customer acquisition. And in the long run, it can help out while you have to be careful that you continue to be fundamentally strong. काफी टाइम ऐसा हो रहा है कि you are seeing a lot of these things happen, especially in the lab-grown diamond jewelry space. People are opening up 50, 60, 80 stores, चालू है, but we don't know how fundamentally strong they are. We have already seen many of these jewelry brands shut down. So it's not that easy. You have to be careful on the fundamentals as well. The second learning is that is very obvious. We are literally saying this since more than 10 years now. Digital is no longer optional. You have to and have to make sure that you have a phygital presence, which means you're digitally very strong and you are also having that physical store experience for your customers. From if you have not started out yet, if you still don't have a website, at least have a WhatsApp business catalog, where your designs, your prices, and your some form of portfolio links are available. Start your Instagram presence that is really working well for luxury industry right now. Put out at least 3 to 4 videos per week. Put out some, new arrivals, new collections, behind the scene crafting of the jewelry unboxing. Try to put out these forms of content as much as possible consistently. Don't get tired. The results are going to come slowly, but you need to do it. Have your Google listings in place. Please set up your own website. Have an e-commerce presence if you are looking to expand digitally. Have an experiential website if you are looking to get appointments and in-store, visits to your showroom. So start building on these things, start building landing pages, targeting different customer personas based on your customer database. A lot of things you can do, and these things don't take time. It just requires consistency. Just like, you know, spread yourself, give yourself 1 month, and you will say, okay, let's finish off all these things, and you can actually do it. So digital is no longer optional. You have to go digital. It does add a lot of value to your brand. Number three is studded jewelry. It's actually a margin play. Every jeweler has confirmed this, as I said earlier. Whether it is PNG, Tanishq, Tanishq has multiple brands, Carrot Lane, Mia, Zoya. These are purely diamond studded jewelry brands, right? So when I say studded, it does not necessarily be only diamonds, but I'm also saying a mix of diamonds and color stones. This is trending. It is outselling plain gold in terms of profitability. The margin is actually structural and it's significant. Okay. So as we can see, your gold margins are typically around 6 to 10%. Your diamond jewelry margins are about 25 to 30%. Color stones can be even more. We've written 24, it can go up to 50, 60% as well. So go out there, start allocating at least 20% of your inventory to studded jewelry. And if possible, try to, uh, have some special area in your store, an exclusive area which may not be accessible to everybody, but it looks that it gives a different form of an experience. And try to push that collection of yours, that 20% collection of yours in that area within your store. Train your staff on the four C's, and not just four C's. Ideally, there are a lot of other things, other factors that we discuss in during our sessions related to the seven C's, the BGM, the black, no black concepts, and all of these things merged with storytelling, not just only the product knowledge, diamond knowledge, grading, clarity, color, cut, ये सब. Your knowledge has to be way beyond that. You have to understand why a customer is coming to you, what is it that they want, and along with the product knowledge, your storytelling experience will eventually get you more sales. And this really works. We've tried this on a pilot basis with multiple of our alumni brand stores, so it really works. And a customer who understands what they are buying, okay, as well as how they are connecting using the story, then they become a repeat customer for you. So if you want to dig deeper onto this, you can approach us at JK Institute. We literally train you to on how to do this. Learning number four, your distribution is bigger than your showroom. So, if you're a single store brand, you don't really need to, think that, okay, the only way for me to expand is opening up more stores. You can create a referral network, an agent network. You can collaborate with wedding planners, event coordinators, bridal makeup artists, stylists, beauticians, boutique store owners, corporate HR managers for festives. The wedding planners, bridal and all are for, wedding-based jewelry, polki jewelry, and so on. And corporate HR managers, you can have a network with in terms of, festive seasons or corporate giftings, milestones, people getting promoted. All of these things can really, really work. You don't need a special store for it. You just need a good network. You need to create that good network. You can do it on a commission basis. You can do it on a, percentage basis, however you find it convenient. And I'm not saying all these things, out of nowhere. Brands are doing this. Kalyan has also created this. They created an iKalyan platform and allowed local agents to set up mini Kalyan stores as a networking zone through which they started selling. So places where Kalyan did not have store presence, or places where they wanted to trial out, before they open a store, they actually did this, and this works. And it's not only larger brands. We have seen a lot of our alumni brands as well. They've been doing this since years. In fact, we literally have certain of our alumni who have zero store presence. All they are doing is collaborating and networking and creating pop-ups and events and just selling through that across multiple cities as well without any store. So it works. Try it out. We, in fact, even have an entire guide onto our Learnathon platform on how you can actually scale up your brand using corporate gifting as a stream of sales. Learning number five is, festivals are actually revenue plans, they are not events. What most of the brands do is they are actually just creating a sale and offer for the days of the festivals. That's not how it should work. You're limiting your entire momentum to just one day or 2 days. Okay, what top brands are doing is they're actually starting advance bookings 4 to 6 weeks before the festivals. We already saw that happen at the time of publishing this video. We have seen multiple events like Gudi Padwa and Akshay Tritiya. We have seen that March से ही चालू हो गए थे all these brands related to their PR, their social media, their offers so much in advance. So the ideal way to do this is to, before 4 to 6 weeks before the actual festival, You need to start your collections, you need to finalize your designs, get the rendering, photography, and all done, the catalogs made. 3 weeks before you start your teaser campaigns, start putting out your offers out there. 2 weeks before, start taking advance bookings. 1 week before, train your staff and your partners to actually do maximum sales on those days, and the event week, don't wait for the event day. The event week, you start on a full activation, allow all the offers, footfalls, and all to come for your store. You can take advance bookings and allow delivery. Maybe, a lot of people think because of auspicious nature of the festivals, they want to take delivery on the day of the festival itself. So allow that, but take advance bookings. Don't wait up for the event. And for 1 week after the event, continue to keep following up for those people who did not buy. They came, the footfalls came, but they did not buy. You keep that follow up, consistently ongoing. And lastly, learning number 6 is revenue. As I said, don't just focus on revenue, because as it's written here precisely, revenue is vanity, volume is clarity, right? So just because the top brands are growing by 40-50% does not mean their profits are also growing. Now, does not mean they are fundamentally getting stronger. A revenue growing by 40% but margins at 7% is, definitely good. It's great, but you can do better. All right. A large chunk of these growth is also rise in gold prices. So I've given one example: a jeweler billing 80 lakhs versus 60 lakhs last year might actually be in decline because maybe they sold fewer pieces or same number of pieces, but the gold price rose by, say, 20%, 30%. So don't run behind the numbers. It could just say something else altogether. So the metrics that you should actually be tracking is number of pieces sold, so absolute unit counts, as well as how much uh, weight you're selling. If it's studded jewelry, how much of carats, diamond carats, right? The carats I'm talking in terms of weight and not the gold purity. So how much carats of jewelry was sold? When it's up coming to gold jewelry, how many grams, how many kgs were sold? So you have to track these metrics. The volume metrics is what I'm talking about. Then also track your average ticket size, which is the total revenue divided by the number of customers or pieces sold, and the gross margins as well. So, a volume-led growth, more customers, more sales per units is actually more durable versus just a price-led growth, which is very much dependent also on the gold price increases as well. So, yes, that's the summary here. In short, asset-like expansion, go digital, push studded jewelry. This is a big, underrated, game-changing strategy. Push for studded jewelry. If you're not aware on how to buy diamonds, buy gems, just comment on this video below, and we'll help you out with relevant links and wherever we can help you. uh, Build your referral networks. You don't necessarily need stores, more number of stores. You can easily, scale your business with just good network. Plan your festivals much in advance. We've broken down the entire 6 week plan for you, and always focus on the volume over revenue if you are trying to grow fundamentally. This is going to be different if you're looking at, having VC funding and, scaling from a different point of view. Then those things may not matter as much. But otherwise, volumes are your fundamental aspects that you have to track. So I hope this adds some value to your jewelry business, and I hope you can instantly implement all of these things as fast as possible. So even for small jewelers, all of this is very important. The gold price can help, can, expose you sometimes. 15-20% correction, which just happened recently. If that, that makes the market slack, having a studded mix helps you. Focusing on margins helps you. Over dependence on one market is also not good. For example, what happened to Kalyan, this entire Gulf war has, trimmed the entire demand in the Middle East. So there is a lot of slowdown in the Middle East. So just having more stores in consumption markets like India and and other such markets within India as well, that helps you leverage and spread your risk a little bit. And in terms of competition also, you have to make sure that there's a lot of transparency. Don't just keep selling your jewelry based on lab reports. Gaya was zamana. Today people are questioning lab reports also. We all know how compromised they are. So how Tanishq has started the diamond guarantee. Tanishq has stopped providing third-party lab reports. Don't like, it's if you're providing third-party lab on the basis of third-party lab reports कि ये लेख देखो हम तो certified दे रहे हैं, that does not work. That does not increase your brand value because आप ही सामने से कस्टमर को बोल रहे हो कि आप हम पे भरोसा मत करो, देखो हम लैब रिपोर्ट दे रहे हैं इसलिए भरोसा करो. So that is what Tanishq has done. They've reversed it. They have said we provide the Tanishq diamond guarantee, and it's their own report that they're providing. So that these things really matter in the long run. So start pulling yourself and creating such experiences that is very, very unique to you and that cannot be replicated. And if I have added any value through this video, do subscribe with us and follow us. That's about it. Enjoy.